Hello grade 10s, welcome to my lesson on the accounting equation for the transactions that appear in the general journal. This is specific for those debtors transactions and some of the new ones that we've learned so far. Alright, so let's do this activity together. It says record the following transactions in the columns provided, assume a favorable bank balance, so that means bank is an asset. Transaction 1. The bank dishonored a check for 833 Rand previously received from a debtor in settlement of his debt of 870. So what they are not being very straightforward, but what they're insinuating is that you gave this debtor a discount. So he settled his account of 870. The difference between 870 and 833 is a discount that you've allocated to this debtor. So originally he gave you the money, he gave you a check, you gave him a discount. Now that check bounced. You're not getting that money. All right. So we now need to reverse the original transaction. So let's look at what it would look like in a T account. In your T account, you would have had bank, you would have had debtors control, and you would have had discount allowed. This is an asset, plus minus. This debtors control is an asset, plus minus. Discount allowed is an expense. All right. Remember, when we're referring to expenses as plus minus, the effect if the expense increases, it decreases your owner's equity. So originally, before this transaction, what had happened? He gave you a check for 833 Rand. He settled a debt, so he reduced his debt of 870 and you gave him a discount for the difference of 37. But this now is the wrong transaction. Or not the wrong transaction, this is now the transaction that you need to cancel because the check bounced. So we're basically going to do the opposite of what you would have originally done. So the opposite would be my bank needs to reduce with the 833, debtors control has to increase with the full amount, and discount needs to be cancelled. So let's now record this in your worksheet format. In your worksheet then, the source document, there's going to be two source documents here. The first part would be the RD check, and that would go to the bank statement. The journal would be your CPJ, because that's where we record cancelled checks. Let's look at it. We will add it back to debtors control. And we would subtract it from bank because I'm not getting that money anymore. In my subsidiary ledger, this refers to your debtors ledger in this case. You would add it back to the debtors account. In this case, my debtor was M. Thompson. So I'm adding it back to his account and I'm adding the full, or in this case, we're only referring to the check, the 830. Both bank and debtors control are assets. The one increased, the other one decreased. So it's a plus and a minus in the assets. For the second part of this transaction, the discount, we would cancel that in your general journal. And the source document is your journal voucher. All right. The second part, where the discount is cancelled, debtors control is still added or debited, and then the discount allowed is credited. The debtor's account increases with the discount as well, because you're not going to give him this discount anymore. He's not entitled to it. He did not pay you back. So you're going to add the 37 back to his account. So your debtor's control, which is the asset, will increase with the 37. This is owner's equity. Your expense is decreasing because you're cancelling the discount, and therefore owner's equity will increase with the 37 Rand. All right. The second transaction. The second transaction says, in Grobler's account is overdue and you must charge interest for 5 months to her account. So it's our normal interest calculation. So it's the 1,200 times 5 months and times 12% or 12 over 100. And that will give you 60 Rand. The two accounts involved would be debtors control and interest income or interest on overdue debtors. This is an income, so it's a minus plus account. Debtors control is an asset plus minus. So what will happen? The debtor now owes me 60 Rand more because I'm charging interest to her account, and my income increases with 60 Rand as well. All right, so in our format then, your source document format, the source document would be a journal voucher because it appears in the general journal. I had to debit debtors control. I'm crediting interest income or interest on overdue debtors. The debtors account needs to increase, is increasing with a 60 Rand. My assets is increasing because debtors control is an asset, and because of the income, owner's equity will increase as well. Right, the third transaction, the account of Cain Williams must be written off as irrecoverable. So it's bad debts. This debtor disappears. He's no longer in existence. So it's debtors control and bad debts. Bad debts is an expense plus minus, but in terms of owner's equity, expenses decrease owner's equity. Now what happens when I write off a debtor, I remove him from my books completely. So I'm saying this debtor is gone. So debtors control needs to reduce with the 544, and bad debts, my expense, will increase with the 544. All right, so this is going to happen in my general journal, and therefore the source document is the journal voucher. The debtor now is decreasing. All right, so debtors control is credited and bad debts is debited. Cain Williams' account is written off, so he's disappearing. I'm subtracting it from his account, the full 544 Rand. My asset is decreasing and my expenses are increased, and therefore owner's equity will decrease with the 544. Right, the next transaction. It says that S. Alona Zeta, who owed 1,500, has been declared insolvent. You received 25 cents in the Rand and wrote off the remainder as irrecoverable. So what it means is her total debt is not lost. You still receive, for every 1 Rand she owed you, you received 25 cents. Only the leftovers, the 75 cents, 100 cents or 1 Rand minus 25 cents, only that is written off. So let's look at our calculation for this. If we say she owes us 1,500 Rand, if we times it by 25 cents, that will then give us 375. This is what you received. So this is a normal receipt from a debtor in your CRJ. The leftovers would be the 1,125. That is your bad debts that you are going to write off. So if we do it in a T account format, we have debtors control, we have bank, and we have bad debts. So in debtors control are asset plus minus, bank asset plus minus. Debtors control is going to reduce with the full amount, the 1,500. But this 1,500 is going to be split into two amounts, the 1,125 and the 375. The 375 is the physical money you still receive from the debtor. So your bank is going to increase with the 375. The leftovers must be written off to bad debts, and the leftovers then, the 1,125 is bad debts, which is an expense which negatively influences owner's equity. Right, so let's record it in here. Again, this will then use 2 lines and 2 source documents, because we will have our general journal for the bad debts, but our CRJ for the amount that you receive. So in the CRJ, you would have your duplicate receipt, your account debited would be bank, and debtors control is credited. The debtor is reduced. Okay, your asset is increasing and decreasing with the 375. The second part of the transaction then is your journal voucher, and that's the remaining 75 cents. The part that you did not receive must be written off as bad debts. Debtors control, your debtor is reduced with the full amount. Your debtors control is now reducing with the 1,000, and your owner's equity, bad debts, is written off. Okay. Number 5, the bank returned a check for 475 received from NCLAC in settlement of her account after a 5% discount had been allowed. So this means this amount is after the discount. So it's similar to the first one, but now we need to calculate the discount amount ourselves. Right, so it's similar to this. We need to cancel a check that has already been received. So the trick for this one is how to calculate the amount. So if we look at the 475, the 475 represents the full amount minus 5%. So the full percentage, and that gives us 95%. So for this amount then, the 475 represents 95. I want to calculate the discount. So the discount was the 5%. So I times it by 5. And that gives me a discount of 25 Rand. Right. So let's record it then, similar to the first one. We will first write off the check source document, and this is for, no, sorry, that was 4, this is number 5. The source document is your bank statement for the RD check, or sometimes we would even accept RD check. Would be in the CPJ. We have debtors control and bank, so it's similar to the first one. We are reducing it from bank, and this debtor now owes you that money. So we are adding it to the debtor's account. Okay, they are both assets, and this now refers to the amount of the check, so the 475 Rand. The second part then is the discount. The discount must go into the general journal. Okay, our debtor needs to pay us that back. Discount allowed. The debtor still owes us that as well, so it's added to the debtor's account, and our amount of 25 Rand is added to debtor's control, which is an asset, and it is a discount, which was an expense that got cancelled. So it's a negative expense and therefore an increase in owner's equity. Number 6, the owner took goods from stock for personal use. Remember, it's always at cost price. So if they do give you the selling price, you need to record it at cost price. In this case, they gave us the amount straightforward. This is a journal voucher because he did not take money. If he took money, it would have gone to the CPJ, but he took stock, and therefore it goes into the general journal. Let's do our T accounts for this quickly, just to refresh our memories. We have drawings and we have trading stock. Trading stock is an asset, plus minus. Drawings, owner's equity, well, the drawings increases, but in terms of owner's equity, minus plus. The trading stock is reducing because he's taking some of the stock. So there's less stock in the business. So it's a credit for trading stock, but he now withdrew more, so he reduced his stake in the business, his investment in the business. Right, so I debit drawings and I credit trading stock. This does not affect a debtor, so it doesn't go into the subsidiary ledger. My assets will decrease with 900 and owner's equity will decrease with 900 as well. The next one is very similar. The owner donated goods with a cost price of $8.50 to the local high school. So the only thing that's different is then instead of using the drawings account, we would replace the drawings with donations. Donations being an expense, and expenses and drawings work in a similar way. So our donations account, what was our amount? It was 850. Donations would increase, but it would then have a negative effect on owner's equity, and your trading stock would decrease even further. Your trading stock would decrease with 850, and this is an asset. This will also go into your general journal. So account debited is donations. Account credited is trading stock as well. No debtor or creditor affected. Assets would decrease with 850 and owner's equity would decrease with 850 as well. Right. The bank statement showed a credit entry being a deposit by a debtor. Remember, when the bank statement sends us information, debit and credit is the opposite way around in their books. So in a bank statement, a debit entry means you have paid out money, and a credit entry means you received money. Okay, and then they also give you another clue. It's money that was deposited into your account. But always remember, a bank statement is the opposite to our bank account because it's from the bank's perspective. All right. So a debtor deposited 743 into our account. A credit entry, a deposit. All right. So this is a normal debtor paying me back. So let's start at the back here. Therefore, it's debtors control and bank. And it is a normal debtor giving me money, so he owes me less. And my bank is increasing. My source document for this, however, won't be a receipt. It would actually be the bank statement because I received this money directly into my bank account. But it's still a CRJ transaction. And therefore, bank is debited, debtors control is credited. It affects my debtor. My debtor now owes me less, so it goes to the credit side. And they are both assets, so assets will increase and decrease with the 743. Right, the second last transaction. The bank statement showed a debit entry. Again, a bank statement, but now it's a debit entry, so that means it's a minus. I paid something. And then they give you another clue, a stop order for rent. Now, a stop order is just an instruction that you give to the bank and say to them, well, I have to pay my rent every month, so please will you subtract this amount from my bank account every month without you having to remember to do it. So it's a document you sign and you ask your bank to make this payment every month. All right, so that's a stop order. It's a written instruction to your bank to subtract money on a regular basis from your account. So we are subtracting 5,400 for rent. So this is again a normal transaction where we have bank and now we have rent expense. This is an expense plus minus, but it would affect owner's equity this way. Bank is still an asset because it's favorable. I have now less money in my bank account and my expense increased. Right, again, it is a bank statement for the source document because it was a stop order. CPJ, bank is now decreasing and it's rent expense. Remember to always state whether it's an income or an expense when it comes to rent, because it could be either. Subsidiary ledger is not affected. Your asset decreases with 5,400 and this is an expense, so it decreases owner's equity. And then the very last one, you charge the overdue account of SLO and her account is 2,100, 7% interest for 4 months. All right, so it's a normal calculation, 2,100 times 7% or 7 over 100 times 4 over 12. Let's make it 7 over 100. And that would give you an interest of 49 Rand. The account's affected. The debtor owes me more money. Okay, because I'm charging interest to her account. And it's interest income or interest on overdue debtors. This is an income and that would be credited. All right, so let's record it in here. It will go into my general journal, so it's a journal voucher. The debtor is debited because they owe me more. Interest income or interest on overdue debtors. Now because the debtor owes me more, this debtor will be affected. My assets will increase with 49 Rand and my income will increase with 49 Rand as well. I hope this video gave you a better explanation of why these transactions are recorded in the way they are. Good luck with your activity. I hope it helps.